Welcome to the UIF Community Podcast. Before we get started, please keep in mind that this podcast is for educational and entertainment purposes only. The views and opinions expressed are those of the individual presenters and do not necessarily reflect UIF Corporation or its affiliates.
On today's episode, we will be discussing a very important topic, the future of money, and how the world around us is transforming and adapting to new technologies and digital currencies. I think it's fair to say that all of us are using cash less and less. The younger generation doesn't even use paper checks anymore. Many of us are increasing use of Zelle, Venmo, PayPal, and many other platforms. And this is just the beginning. Welcome to the UIF Community Podcast. I'm your host, Omar Subhani, and I'll be joined by Ijaz Hussain and Ali Hassan. Ijaz and I work at UIF in senior management. Ali Hassan is an expert on the topic of digital currencies and a successful money manager in this space. For those of you not familiar with our company, UIF, we're the number one faith-based financing company in the US. We offer home, commercial, real estate, and auto financing, as well as investment options. Please visit our website at myuif.com to learn more about UIF. Before we dive into the topic at hand, I always ask Ijaz to give us a short economic outlook. Ijaz, we had a couple of interesting weeks in the housing markets and the financial industry. Considering we're on recording on 10/7, October 7th today, what would you like to share, or what thoughts would you like to share with us, our audience, this time around?
Yes, Omar, thanks for that opportunity. Since we last recorded our previous podcast, a lot has happened in the U.S. and global financial markets. I'm touching about the U.S. first. As expected, the Fed, cut short-term interest rates on September 18th by 50 basis points or 0.5%. And this is the first rate cut we have had in the U.S. in over 4 years. Now, when I tell that to people, most people, think right away that, hey, as soon as Fed cuts short-term rates, the mortgage rates also go down at a similar percentage. But that's not the case, because short-term rates are what's controlled by the federal government, and they impact short-term loans like car loans, credit cards, savings accounts, if you have at a bank, CDs. So those are impacted immediately. However, the long-term rates, which is how most mortgage rates are tied to, they do not operate in exact unison. They operate a little bit differently because long-term rates are more driven by economic expectations. So how the labor markets are doing, how the unemployment rate is holding up, whether it's going up, whether it's going down, how the inflation is holding up, what are the recession expectations in the markets. These are the things that come into play when and how these long-term rates operate. And over the last year, the rates have already been coming down. We've talked about that on the previous episodes and previous webinars we've done. So even though the short-term rates have gone down last week, the long-term rates actually have gone up, surprisingly enough. And why? Mainly for two reasons. One, it's called repositioning of portfolios. There are a lot of institutions, bond fund managers, big retail investors. They typically bet on interest rates going one way or the other. So when the move is actually announced, they have to now reposition their portfolios. It's not always good or bad. It's about what side of that trade were they caught on? Were they on the bullish side or the bearish side? So these type of things come into play, and the rates may move in one direction or the other. The other big story was the September unemployment report, or the employment report, I should say, came out last Friday, which was on, I believe, October 4th. And that report actually was much better than expected. The economy created over 240,000 some new jobs. The unemployment rate went down to 4.1%. And that is not good news when it comes to the long-term rates, because now the market feels that, hey, we were expecting more further rate cuts going into the year and possibly another 1% rate cut next year. Now, all of that comes into play because if the inflation heats up again, if the job market continues to stay strong, then the federal government has less of an incentive to lower the rates. So you're seeing this dichotomy in the markets, if you will, and the rates have actually gone up a little bit over the last week or so, as opposed to going down. The question I always get again is this a good time to buy a house? And I always tell, my answer is the same. If you are looking to buy a home to live in for your family, it's your primary home, then it's always a good time. Because if you find the right house, you find your dream house, that's not going to wait for you. You can always buy the right house, your dream house now. And if the rates go down in the next 6 months to a year, you can always refinance to lower the monthly payments later. But that house will not be waiting for you. So if you're looking to buy an investment property, my thought process might be, okay, it doesn't hurt to wait a little bit, see how the rates are headed. But if you're buying a primary home, I always recommend that no need to wait, just buy as soon as possible, and you can always refinance later. I do want to touch upon, Umar, the stock market action that was pretty meaningful. I don't really talk much about the stock market on this economic reviews, but there was really this U.S., taking a stance and cutting rates. It gave China the ammunition to cut their own rates. There's a lot at stake here in terms of currency moves, etc. So China didn't want to make this move before US did. But as soon as US made this move, China came out with a massive fiscal stimulation package for their economy. And this is really a game change, the amount of stimulus they're looking to do there. And already the Chinese stock markets, a lot of the Chinese stocks like Alibaba and JD.com so they've all gone up quite a bit already. But what I want to point out to our community members is this: if you don't have emerging markets exposure, you should consider that, whether it's directly through a broker or if you have money in your 401k, you must consider allocating some money to emerging market funds, mutual funds or ETFs, because those markets are much more undervalued currently than the US stock market. So again, this is not investment advice. You need to speak with your financial advisor. But I feel this is a good time to at least reposition your own portfolios, maybe to bring or add more emerging markets exposure, because I think it will help you in the next few years, in my humble opinion. I'm going to conclude, Omar, with just something that you and I have talked about, which is getting our audience members involved in our podcast. So bottom line, we need future podcast ideas. Since we launched this podcast, a few months ago, we've done 7 episodes, and we're humbled by the success we've had so far on our journey. Our first 7 podcast episodes have been heard over 80,000 times on various platforms. But in order to keep bringing you some good topics, we want to engage you and hopefully we can benefit from your idea. So if you have a podcast idea, whether it's a good book or an interesting speaker who you think can add value to our collective lives, please email us your thoughts. Our email address is feedback@myuif.com. Our team will review the emails and we'll pick some interesting topics. We may even invite you to be a featured speaker, and you can cover the book that you like, and we can engage with you in a question-answer format. So your ideas are welcome. Ideally, we would like to cover topics on leadership, self-improvement, community member success stories, and so on. We will consider any topic that we believe can add value, but we like to stick with these type of topics that can enhance, educate, entertain, our community members. So when you send your email, in your email subject line, please put their new podcast idea so we know we can direct it to the right people. And again, the email is feedback@myuif.com. So with that said, Umar, let's turn to the main topic now. The floor is all yours.
All right, Ajaz, why did we choose this topic, the future of money, for our discussion today?
So, Umar, as I've stated in the past, the purpose of this podcast is to bring interesting topics to our listeners that add value to their lives. And, what is more interesting than the topic of money, and more specifically, the future of money? I thought this would be a great topic for our listeners because, I'm very troubled, to be honest with you. We live in very interesting times. Our federal government is running around a 2 trillion deficit annually, and our national debt is 35 trillion and counting. For those of people who don't know the difference between deficit and the debt, I just want to clarify that. It's kind of an important difference here. Deficit is basically what the country collects in terms of revenues and then what it pays out in terms of its payment obligations. So, for example, right, as us as people, if we make like $100,000 a year in income, but we spend $150,000 a year, that $50,000 we have to get it from someplace. Most of us may park it on a credit card. So because we are making less and we are spending more, that 50,000 is our deficit. Now we can't go on very long piling on to credit card or other debt, but governments can do this routinely because they have the ability to print money, and they believe that, hey, we'll keep printing money, we'll keep spending money, but somebody will pay it off later. And this negative balance of the deficit that keeps adding on, it piles onto the national debt. So when government spends money on military, social security, Medicare, social programs, taxes are not enough currently to offset that, their spending. So all of this deficit is adding up, and I'm deeply concerned that our leaders are not doing anything about it. And this will have to be paid at a later time, most likely by our children, our grandchildren, in terms of inferior living standards, in terms of higher taxes and so on. And part of that, coming full circle, is people have started taking matters in their own hands because they don't trust the deficits and the debt that our government is mismanaging. New technologies, cryptocurrencies, alternative platforms are coming into play, and which will shape how money and the financial world will be viewed in the future. And that is why I thought, this topic is very, very timely, and hope audience enjoys it. And we have a very, very special guest. He's a big supporter of UIF, and over time he's come to educate our UIF community members through webinars. We've done a couple of webinars in the past with Ali Hassan, and Ali has very kindly accepted our offer to join our podcast today and discuss his thoughts on cryptocurrencies and the direction and the future of money. So, Umar, I'd like you to introduce Ali, and let's get going.
Yeah, thank you, Ijaz, for that overview. So today we're joined by our guest, Ali Hassan. Ali began his career as an investment analyst at Goldman Sachs, where he traded equities and options. Most recently, Ali founded and successfully exited Crescent Crypto Asset Management, a cryptocurrency investment management firm. Ali is a seasoned founder and is currently a founding partner at Perceptive Capital. Ali, we're thankful to have you on the show today with us. Can you make a few opening comments before we get started?
Sure. Thank you very much for inviting me. It's always been a pleasure coming on the podcast with you guys. I think this is the third time we've spoken, times when Bitcoin is up, times when Bitcoin is down. But what the most common thread, the needle that I've threaded the entire time we've spoken, is my belief in Bitcoin. This is a belief that I've held strongly for many years. I first got into Bitcoin in 2013, started writing and publishing about Bitcoin in 2016. And over the past 11 years now, my belief has never wavered. And I'm confident in saying that I am more confident in Bitcoin today than I was even back then. When we first started talking about Bitcoin, there were a significant amount of risks that investors were getting compensated adequately for. Today, a lot of those risks have gone away. And my goal with this conversation with you and your listeners is to educate on what the risks are that exist today, how we as investors can get compensated for taking those risks, and why it makes sense to own both Bitcoin and crypto overall in a portfolio. The only way to do that is to understand the underlying technologies, understand what we're investing in, so that we're not worried or we're not scared when the prices go down, or we're not too excited when the prices go up and sell prematurely. So I hope by the end of this conversation, your listeners will have a fundamental understanding of Bitcoin and why it should belong in a well-diversified portfolio.
So, Ali, before you take us to graduate school on Bitcoin and educate us on where the future is headed, I think it's important. A lot of our listeners may not be as savvy when it comes to matter of monies and how the world has evolved. We wanted to quickly touch upon a little bit of the history of money. So important before you understand where the future is headed, to understand where we're coming from. Omar, do you want to touch a little bit about the history of money? I know you've been doing some research on that and enlighten us on where we've come from, so to speak.
Yes, I do, Ajaz, and thank you for that. Ajaz, just for our audience to know, you really made me put my history degree hat back on my head and go way back in time and research about the history of money. So I appreciate that.
I want nothing but the best for our audience, Omar. So it's coming from a good place, trust me.
It is, yeah. Even though I spent the majority of my my history degrees studying 1945 and onwards political history in the U.S., but I'll do my best here to educate the audience on the history of money and the future of money. So in today's segment, we're discussing the future of money and how it's evolved from a barter economy to coins to paper currency, plastic credit cards, and now to digital currencies like PayPal, Venmo, Zelle, and Bitcoin. It's important to understand the history of money to formulate an opinion on the future of money. So there is some historical evidence that humans started with the barter system first. Livestock was traded for wheat, rice, and barley, for example. Bartering was not practical, as not everyone wants the same things. People then turned to precious metals as a means of exchange. For thousands of years, gold and silver were the foundation of trade and wealth. People valued these metals because of their rarity and durability. Coins made from gold and silver were minted to standardize their value, making them easier to use for trade across different regions. Then came a major shift with the introduction of paper money. This innovation began in China during the 7th century, but it wasn't until the 11th century that paper currency became widely accepted. Unlike heavy coins, paper notes were easier to carry and allowed governments to manage their economies more efficiently. Then we fast forward to the 16th century, and we see the creation of central banks and the rise of government-backed money. This was done mostly to finance wars and tax the people. Later, centuries later, central banks became more powerful, and gold became the metal that backed printing of local currencies. But the story doesn't end there. In recent years, we've entered the age of digital currencies. Cryptocurrencies like Bitcoin have emerged as a decentralized alternative to traditional money. Unlike cash, which is controlled by central banks, cryptocurrencies operate on blockchain technology, allowing secure and transparent transactions without intermediaries or middlemen. This digital revolution is redefining what we consider money and will transform global finance in the coming years. The bottom line is cash is dying as new forms of payment alternatives take hold. I think most of us use our mobile phones or credit card to make payments already. Cash is being used less and less. From bartering to coins to paper and now to digital currencies, the history of money shows how our financial systems adapt to new technology and the needs of society, constantly evolving to meet the challenges of a changing world. Ajaz, I know you wanted to add some additional historical perspective to my commentary, so please go ahead.
Yeah, when we were discussing the history of money here, I felt there were three very important dates that our audience should be aware of because they played a significant role to where we stand today. The first date I'm going to say would be July 1, 1944. Let's go back to that time. This is World War II had ended. Europe was in deep trouble. They were almost bankrupt. All the major Western economies were bankrupt or close to it after the war ended. A lot of the money, their gold reserves, were used in purchasing weaponry to fight each other, and U.S. was supplying. U.S. was the biggest arms supplier, so they were still supplying weapons. So they ended up selling weapons to European countries and in essence took their money and the gold reserves. But now the time had come to rebuild, and the challenge became, well, how do you rebuild when your currencies are not worth much and your gold reserves are pretty much dwindled down to nothing? So there was a conference that was held in July 1, 1944. It's called the Bretton Woods Conference. 40 delegates from 44 different countries attended that. And, they signed an agreement. And the agreement basically was that, hey, listen, we just cannot go and print unlimited currencies because that's just going to hurt everyone. But we need to tie it to something. And tying became tying to gold. Now, because the U.S. was sitting on 2/3 of the gold reserves at that time, the dollar became the de facto currency. And the U.S. said, listen, we own 2/3 of the gold reserves. Dollar becomes, we'll tie the dollar to this gold reserves. And any time anybody wants to come in and exchange US dollars, we will give them back gold. So this way, countries started, manufacturing their goods and services. They started selling these to the US as one of the biggest trading partners. And in return, US would buy their cheaper goods and give them bags full of US dollars, if you will. Now, what these countries realized very soon was that, hey, what are we doing with all these dollars? US has basically, all they do is they keep taking our goods and services and they're giving us all these dollars. So they started coming back to the US and saying, hey, you know what? We have way too much dollars here. Can you please take back some of these dollars and give us back the gold? Now, US realized that, well, that's a problem, because just taking back our own dollars and giving away all our gold is going to put us back in a very challenging situation later on. So President Nixon comes in, and the second most important date is August 15th, 1971, when President Nixon comes in and says, you know what, I'm just going to go ahead and terminate this whole Bretton Woods agreement because it's very damaging and harmful to the U.S. So he terminates that, and in essence, he basically says, you know what, now the U.S. dollar will no longer rely on dollar reserves, but it'll rely on the full faith and backing of the U.S. government. So he basically changed the rules, and now U.S. was free to print as much money as it wanted. And politicians, when you give them free access to printing money, they will just print money. So this money printing has been going on. We keep piling a larger and larger debt. However, when the major crisis happened in 2007, 2008, the world almost collapsed. If it wasn't for the government stepping in to save the monetary system, we would have all been in terrible shape. But a seminal moment came when Lehman Brothers completely collapsed, one of the largest U.S. investment banks, in September 2008. And then a couple of months later, October 31, 2008, a white paper was published by someone by the name of Satoshi Nakamoto. Nobody really knows the true identity of this person, whether it's a person, whether it's a group of people, but he put this white paper out saying, we're going to establish this new platform, if you will. And I know Ali is going to touch upon that a little bit more, so I don't want to rain on his parade. But this, he basically said, this is going to be a peer-to-peer cashless transaction system that will have no intermediaries, no central banks involved, and it can be messed around because it will not be backed by any central banks or their currencies. So this was a very, very important date that gave birth to cryptocurrencies and Bitcoin in particular. So that's kind of a general history. Those three dates are very, very important, in my opinion. Ali, anything you want to share about what Omar and I commented about the history of money so far?
I think that's an excellent analysis of money. One thing that you both noted that really resonated with me is the issue of politicians and giving them free rein. So this whole idea of inflation wasn't just started with Nixon and the ability to print infinite amounts of money. In fact, this can be traced back to the times when we were still trading precious metals. At the time when governments were facing similar issues in the post-World War II era, emperors, kings, monarchs of many different governments would essentially create inflation by devaluing their gold supplies. So instead of having a specific required amount and weight of gold in their coins, they would actually cut their coins with different non-precious metals in order to artificially increase the amount of currency in circulation, essentially stealing value from those that have saved in those gold coins and silver coins in a way prior to what we have today. They would also switch from gold to silver, silver to copper, mix the coins together, decrease their weights, cut them. This is a tale as old of time, and it's something that will continue to happen as long as we don't have a separation of money and state. The state will often influence the money in ways that don't necessarily benefit the constituent. The United States is obviously famous for its separation of church and state. I believe that Bitcoin is the precursor to the separation of money and state. And I believe that at some point in the future, these specific dates, these topics that we're talking about will be talked about in the same manner that you're talking about the history of money. Bitcoin really is the first method, the first way that we can move money into the digital era. We've digitized almost every single aspect of our lives. that you can think of. There's very little things that we do in an analog manner anymore. I can't think of 5 examples of analog things that I do. Everything from communication to movement to the transfer of money. Everything is done in a digital manner except for physical money and fiat money. I believe that gold is often considered the last analog remnant of the traditional world. I believe that Bitcoin is the digital era. It will bring the digitization of gold. It's a really cool asset, and I'm looking forward to speaking about it in the context of the history of money and the future of where money's going.
Yeah. So, Ali, when we decided to pick this topic up and invite you as our guest speaker to add heft and with your knowledge and experience, one of the things that, and anyone knows this, I do a lot of reading, so I read a lot of books, and a couple of books I read on the topic of future of money, death of money, etc. The book that I was very impressed with, if you will, was one of the first books that was put out by Eswar Prasad. He's actually a professor at Cornell, and he wrote a book called Future of Money. And I'm going to use that book as a backdrop for our topic today and bring up some of the points from that book and then ask for your feedback. So his book, Future of Money, that he penned, it basically was, how the digital revolution is transforming currencies and finance. That's basically what the book is about. And the book premise is very simply laid out. It says, physical money, cash, aka cash, also known as cash, is becoming extinct. Digital currencies will soon take over as a primary way to make or receive payments. He goes on to elaborate that, China, Sweden, India, and some other emerging market countries are doing a much better job with digital payments and overall fintech transformation compared to developed countries and economies like US and Western Europe. And, he talks about how in China now they have private companies like Alipay and WeChat Pay that account for majority of the payment transactions. India is doing it a little bit differently. India government provides the back-end infrastructure, but private companies can provide the front-end retail platform service platforms, if you will. So, and one thing he made a comment that I really liked. He said, fintech in the developing world is a necessity. However, fintech is considered more. Fintech in emerging markets, developing world is a necessity, but in economies like the U.S., it's more of a luxury. It's good to have it here because our banking systems are more or less developed to a great degree. But in other countries, whether it's Africa, whether it's India, whether it's China, it is absolutely a necessity because many people don't use traditional banking methods. So that's why he said, this distrust for fiat currencies, banking institutions, charging excessive fees is going to lead to more and more fintech platforms. So what are your thoughts in general, Ali, about, you see the world from a different perspective as well. So your thoughts on fintech and how other countries are doing vis-a-vis US and Western countries.
Eswar Prasad is a brilliant professor and a brilliant author. And his book is transformative in many ways. One of the things that I found most fascinating, and I agree with him at, is that the death of physical money is inevitable. The reason I might not necessarily agree with the reasons that he has, but the conclusion I agree with. I believe the death of physical money is inevitable because physical money is actually very difficult for governments and government officials to track. The overwhelming majority of drug deals, any sort of illicit activity around the world happens with physical US dollars because physical US dollars are extremely difficult to track. Why then would not every single government around the world require or get rid of its physical assets, this physical cash, in favor of a digital central bank digital currency that they can monitor, track, tax with total and complete authority? In the United States today, we make money, we earn money, we then have to report the money that we earn to the IRS, and then we have to pay taxes on it. In a world like China, in a world like Sweden, in a future state like in the United States, where every single dollar is a digital currency, every single dollar is accounted for. We can see where every single dollar is, how it's spent, who it goes to, where it went to, what time. The government has total and complete view into every single transaction that we do. So while this is proclaimed by many as a advancement, as a fintech positive, I actually view it as a negative. It will remove all privacy from human transactions. It will make it so that the state becomes an all-knowing master of every single micro and macro transaction that you ever do. The state has the ability to seize assets at its whim. Because of that, I think it's inevitable, and the state will push for this power. I think every single government around the world will push for a version of its own central bank digital currency. I do not believe that these central bank digital currencies are going to compete with things such as Bitcoin. In fact, they are the antithesis of Bitcoin. But they will compete with each other, and they will compete with physical cash. And I think they will bring about the end of physical cash.
Yeah. So the book basically, it's broken into three main parts, I would say, from my reading. One, it talks about the future of the dollar system, and the second, it talks about just the rise of cryptocurrencies. And that's where, Ali, I want you to spend some time getting into blockchain as well as Bitcoin. And then the third part is the central banking digital cash, CBDCs, as they call, governments coming out with their own digital currencies to fight companies like or platforms like Bitcoin, if you will. Let's cover these topics individually. So, future of the dollar system, right? So this I'm going to share my thoughts, Ali, and I'm curious to hear what you think. The book I read, that I'm not a big fan of his author because of his political views, and in general, I don't agree with everything he said in the book, but his book, The Death of Money, he makes his case that the US dollar will not remain the world's reserve currency for a long time due to government mismanagement of deficits and political infighting and so on. And it makes the point that, U.S. government weaponizing the dollar against other countries will lead to imminent demise. All of this part I agree with. Everything he said over here about why dollar will not remain the world reserve currency, I agree with all of this. It's just that he sensationalizes a lot the whole premise and how it's built. So I'm not a big fan of this book per se, but some points are good. I agree with this. I think we're staring into some really tough times ahead. The way this nationalistic movements that are taking place, not just in the U.S. but other countries as well. And the U.S., when it chooses to freeze assets of other countries like Iran, maybe, or of Venezuela or others, it really makes other countries think, well, do we trust the US dollar anymore? The whole point we were owning or hanging on to the US dollars is because we felt it's a rule of law over there. There is, it's not a dictatorship when one person can come in and say, hey, we're going to freeze this or take this away. And that I think is really changing. The US now holding on to other countries' money, like now most recently was Russia's money was being held and frozen. That's why, Russia, China, these countries are trying to find different ways of rerouting their money, dealing with their own currencies, using the Chinese yuan to buy oil from the Middle East or rubles and so forth and others. So I really feel that is what he's talking about is going to come true, where the dollar itself as a world currency at some point is going to keep losing its value. So what are your thoughts on that, Ali, in terms of the U.S.?
I agree. The weaponization of the dollar will bring about the imminent demise of the dollar. That same power that has allowed the U.S. to become the world reserve currency, the fact that we have this monopoly on the issuance of dollars, whereas the rest of the world only reaps the downsides of it, that is an issue. It has benefited the United States for many years. It has benefited us domestically, has benefited us in as U.S. citizens, but it only hurts others who hold U.S. dollars. Every single time we create new dollars, sure, there's some small benefit that comes to us, additional infrastructure, roads, technology, healthcare, whatever it is, all at the cost of every single other country and every single other person who holds a dollar. That weaponization, when it's used offensively in the freezing of assets, whether it's Russia, Iran, Venezuela, that starts to cause issues not just for our adversaries, but also for our allies. If I'm an ally, if it can happen to them, what's stopping it from happening to me in the future if I have some disagreement with the U.S.? That then leads me to start looking for alternatives. This is where I think the conversation gets really spicy and interesting. What are those alternatives? Let's say you and I both agree, Ajaz. We agree, sure, the US dollar hegemony will not exist forever. We think that it's going to happen within our lifetime. Sure, we agree there. What comes next, though? Is it the Chinese yuan? Is it the Russian ruble? Is it the euro? Do any of those even make sense? My opinion is the same issues that we have with the US dollar, every single other country will be wary of every single other ones. Is it a conglomerate of them? I present the case that the only plausible replacement for the US dollar is something that falls outside of the control of any government. The separation of state and money. Something that no one entity can weaponize or can assert dominance over. Something that it doesn't matter how much you own of, it doesn't necessarily give you control over the network. And that thing, I believe, is going to be Bitcoin. It is truly the only one that not just people, but governments can trust. If I am China, I don't trust the US. I might not even trust Russia. If I'm Russia, I don't trust China, and I don't trust the US. If no one can trust anyone, no commerce can happen, right? Commerce exists on trust. You cannot have any liquidity in a market. You cannot have any scale. You cannot have any transactions that happen without trust, whether it's trust in the opposing entity or trust in the currency that you're using to exchange. I believe Bitcoin brings that trust back into a world where there is no trust. We lack trust today. Bitcoin does not require any trust. It is trustless. Anybody can interact with it. And I believe, and I'm interested in your thoughts on, if not the US dollar, what would it be?
Yeah, no, I think I agree with the premise about the dollar slowly losing its relevance in the world. But the thing that's going to keep it going for longer than the people are predicting the demise, to me, is these bond markets, because I feel like the trust is one big issue. People are not going to trust China or Russia or any other country more so than the dollar, because U.S. government, U.S. still has a much better legal framework, the rule of law, and so forth, that people trust much more. So that's one. Number two, I feel the bond market that we have is so trusted, and nobody has a bond market in the world like the U.S. does. So because when these countries get these dollars, they can turn around and invest by buying these treasuries, because they're not going to hold these dollars in their currency. So when China sells goods and services to the US and the dollars flow into China, they turn around and they buy these treasuries because they don't know where else to put it. They're not going to be who to trust. Where do you put this money? Do you put that in the Russian bond market? Do you put that in the Indian bond market? I mean, and then if those bond markets lose value, then their currencies lose value. So it's much more complicated. So I do agree with everything you and I said. It's pretty much the same thing. But I think this is going to be a process that takes on a lot longer than people think. It's not going to happen in the next 5 to 10 years. I think it's going to happen over maybe next 25 to 50 years, which is not that long when you look at the world from hundreds and millions of years and billions of years and so forth. Ali, I know obviously you alluded to this and you're a big believer in Bitcoin. And this is where the future of fintech is really going. In the book that he talks about how new platforms are going to come in, whether it's a cryptocurrency, and Bitcoin is a big part of that, but also other firms like PayPal, Affirm, and now, with Venmo and Zelle, Omar alluded to it earlier, all these alternative platforms for paying and receiving and so forth are coming up. So future of fintech aside, so Ali, I want you to talk a little bit about Bitcoin. I know you're a big fan. You're an expert in this topic, if you will. So why don't you explain for a person who doesn't know anything about Bitcoin, who's listening to this episode for the first time, to understand what is exactly Bitcoin? Maybe start over there, explain what is Bitcoin, and then why you think this is a technology that radically, transforms the future of money.
Sure. The beauty of Bitcoin is in its simplicity. Bitcoin is the most simple way for parties to transact without ever trusting each other or a third party. We all agree to the value of the units that are existing in the ecosystem. We cannot add any more units into the ecosystem. We cannot take any units out of the ecosystem. All we can do with the Bitcoin ledger is move the units of Bitcoin back and forth. It's that simple. It's super easy to understand, and it makes it impossible for any party, whether it's a government or corporation or bad actor, to influence it, to seize it, to manipulate it in any negative way.
So, Ali, one of the criticisms that follow Bitcoin, and I agree with this criticism, which is, it was supposed to be a means of exchange. That I think it is. It's a great means of exchange. You can move it around, exchange anywhere in the world. But the criticism I have, and which I agree with, actually, is the store of value part, right? The proponents of Bitcoin, they feel it's a store of value because of the limited 21 million units that you talked about. But to me, a store of value has to be something that I feel like there's no way to determine the intrinsic value. It just comes down to what somebody's willing to pay for Bitcoin today versus what somebody's willing to sell Bitcoin today. Today, if it's $60,000, it's because somebody sees value at 60,000. Tomorrow, if it drops to 40,000, somebody is seeing value at 40, somebody's selling at 40. So that's a struggle that I have. That's why I've never invested in Bitcoin, because I feel like it's too much of a speculation tool for people who are buying and selling at whatever price they deem fit. What are your thoughts on that?
I love that criticism, and it's a valid criticism. The answer is, unfortunately, another question, and it's something that it's a thought process that we as investors have to think through. What drives the value of a stock, Ijaz? If I ask you the question, what drives the value of Apple?
It's the cash flow. It's the earnings they make. So there is something behind it, in my opinion.
Exactly, right? So there's a CEO, and the CEO has ideas, and they raise money. They take $100 from you. They buy $100 worth of material. They go produce a $1,000 iPhone. They sell that iPhone, and they make a profit, and we all share in the profits in ownership of that stock. The same can be said with bonds. There's cash flows associated with the interest payments. The question becomes a lot more difficult if I ask you, what drives the value of gold?
Yeah, well, because there's a demand, right? Countries like India and China and others, they make jewelry out of it. People see value in gold because it's actually something they can touch, they can feel, they can take it to a bank, put it in there as insurance policy against fiat currency. So there are multiple reasons how you can determine some value based on that.
Excellent. Would you be surprised if I told you that less than 1% of the global gold supply is actually used in jewelry? The overwhelming majority of gold's market cap exists in the form of investment products, for those people who are speculating on it. Gold is driven by one metric and one metric only, and that's demand. The supply is relatively fixed. We do keep finding more gold, and we're getting better and better at producing more gold. So we're producing more gold every single year. But the demand is really what drives the value of gold. And that demand is driven largely by a flight to safety. Whenever there's global insecurity, war, famine, virus, any instability in the world, people tend to fly to safety. And historically, over the history of humanity, that safety has been gold. And it's worked, and it's worked pretty well. The gold today, Bitcoin today, represents a market cap of 7% of that of gold's. So all the Bitcoin in existence, the 21 million times the $60,000, represent approximately 7% of the global market cap of gold. That is the bet that we're making, right? So when I try to convince someone on what drives the value of Bitcoin, what is the intrinsic value, it's not too dissimilar from gold. If you understand why someone would invest in gold, then you can understand why someone would invest in Bitcoin. You are betting on future demand. The supply is fixed. It's a constant. There's only one variable. It's actually the only investment in the world that I can think of with only one variable. You have a constant supply that doesn't change. And what I am betting on today, and what you would be betting on today, is, do I believe that there's going to be a higher demand for this asset tomorrow than there is today? If I do believe that, then I have to buy Bitcoin. If I don't believe that, if I believe that there's going to be less people, less corporations, less governments willing to buy Bitcoin in the future, then I have to be a seller of Bitcoin. Today, where it stands at $60,000 with a tiny, approximately $1 trillion market cap, it is far from where it needs to be. It's a fraction of what gold is. And I am betting that whether or not it ever supersedes gold, this digital representation of gold, this digital version of gold, has the ability to capture more of the market share and the mind share of gold. And if that were to happen, then investors would be really happy. I'll close with this, Ijaz. In order for Bitcoin to be at parity with gold, meaning for all the gold in the world to have the same exact value as all the Bitcoin in the world, you would need Bitcoin to be at approximately $887,000 per unit. We're sitting at $60,000 per unit right now. So we're looking at more than a 10x return for it to achieve parity. I am of the belief that it's going to surpass gold. But even if you were more conservative than me and you think that it's going to be half of gold or a third of gold, you can see why an investment in Bitcoin today would be a prudent investment with asymmetric return profiles that are unlike any other investment.
But Ali, what about like other currencies, coins come into play that take on a bigger role, hence shrinking the potential of Bitcoin? I mean, you obviously you're thinking Bitcoin is going a lot higher from your comments, but are there other currencies that can come in and the pie might get bigger, the cryptocurrency pie might get bigger, but Bitcoin share might shrink in there. So the optimistic numbers that you have in mind of getting to, let's say, 100, 200, 300,000, whatever your view is that a possibility? Or do you think no other coin can truly replace the dominance of Bitcoin?
Sure. I do not think that the other coins can replace the dominance of Bitcoin for one fact. Bitcoin doesn't compete with any of those other coins. A lot of the coins compete with each other. For instance, there's a lot of L1 smart contract platforms. A lot of your listeners might be familiar. Anything from Ethereum to Solana to Near to others who are building even on top of those. Those projects compete with each other and have the ability to grow massive and have the ability to disrupt their own ecosystems. But no one is competing for the global money supply. No one is competing for the global gold market cap. These projects are really advanced venture capital plays. You're betting on technology. You're betting on CEOs. You're betting on cash flows. You're betting on growing market share. You're getting market penetration. It's very similar to a venture capital type play. There's going to be winners. There's going to be losers. There's going to be massive winners, and plenty of them are going to go to zero. I'm a believer in a lot of those other projects, and I think that they could also exist in a well-diversified portfolio. But the fact that their existence does not in any way or form detract from Bitcoin's ability to dominate what its sole purpose is. Its sole purpose of Bitcoin is a store of value, mean of transfer. Bitcoin is competing with gold. Bitcoin is competing with money. None of these other projects are in any realm near that. They are tech plays that will do well, some of them, but they won't exist. They won't compete with Bitcoin in the way that you have presented it as a possible taking away from Bitcoin.
Why 21 million cap? Why not 15 million? Why not 25 million? Why did Satoshi Nakamoto decide 21 million is the right number to cap this?
I wish I knew. That's like you said, we don't know who Satoshi Nakamoto is. We don't know if it's a he, a she, a them, a group of people. We don't know what country they're from. Plenty of people speculate. We don't know why. What we do know is how those 21 million are distributed. So Satoshi Nakamoto, the person, the entity, has approximately 1 million Bitcoins that have never moved, that have existed in their wallet since the beginning. Today, all the ETFs together, in under 1 year, have accumulated almost 1 million Bitcoin as well. So I don't know why 21 million, but I do know that if you take a look at the distribution of coins over time, you see that the largest wallets tend to continue accumulating more and more Bitcoin. The concentration is getting higher at the top end. What that means is smaller investors are getting scared and selling their Bitcoin to larger investors. That in and of itself shows you the amount of belief, the amount of monetary power behind this ecosystem. And it's not just the money. Think about how many different people are putting their entire, myself included, are putting their entire careers, their entire livelihoods on the line for this asset and this ecosystem. Plenty of people who have left Wall Street, left private equity, left hedge funds to participate in this ecosystem. We're still in the early innings. Early innings. $60,000 Bitcoin is going to be something that we wish for in a couple of years. And I'm confident that 21 million cap is going to be a positive influence over the coin, over the market cap of the coin the finality of it is intriguing by most.
Ali, those of us who live in the US here, I mean, for us, moving around money, paying through Zelle or these platforms, very easy. I was in Paris for Olympics recently. Before I went there, it was very easy for me to use, whether it's a Visa card or use the ATM to get the cash out over there. But many countries, African countries, other countries in the world, they don't have the luxury that we have here. So for them, the medium of exchange in terms of Bitcoin is very important. It's very vital for them because they use that to move. And even if me, as an insurance policy, if I'm concerned that, hey, maybe government can come after my money and my assets down the road for whatever reason, maybe having some money in Bitcoin so I can have that as an insurance policy. If I do move to another country, I can easily transfer it over there and use it over there. So I see the benefits from a medium of exchange. The question I have for you is, number one, is there can this money be transferred with a couple of clicks if you don't have internet, or you have to have internet service to be able to move Bitcoin around? And then any other thoughts on it being as a medium of exchange?
Yes. So let me answer the easy one first. Yes, you have to have internet. It doesn't necessarily even need to be a high-speed internet connection. You need some basic internet so you can communicate to all these other maintainers of the ledger. Remember, we talked about the ledger. You have a copy. Sure. I have a copy. Omar has a copy. In order for you to send one Bitcoin out of your account, every single one of us that maintains this ledger, we have to communicate that to them. You have to essentially give them the secret code that says, hey, I am Ijaz. This is my account. This is how you can prove this is my account. Please move one Bitcoin out of my wallet and send it to Ali. That has to happen over some sort of communication. So yes, you do need some internet. As a means of exchange, Bitcoin is so beautiful. In that, let me give you some stats. Since its inception, Bitcoin has actually had over a billion, almost 1.1 billion transactions. 1.1 billion transactions. Those billion transactions, every single one of them, and all the data associated with all of them, can fit on my laptop that I'm using right now. The entire chain size, all the data since its inception, is 685 gigabytes of data. So it's an extremely simple, almost not archaic, not barbaric. It's so simple and requires such little data to transact in that it makes it perfect for the countries that you mentioned to be able to use. That same simplicity and the fact that it's so decentralized and used by so many people throughout the whole world, and the maintainers of the ledger exist throughout the entire world, bring us to the second point. It is extremely difficult to manipulate, meaning that if Ijaz, you turn out to be a bad guy, and the government wants to seize your assets for whatever reason they deem it legal or reasonable to seize your assets, if your money was in a bank, all they have to do is issue a subpoena to Chase Bank. Hey, Ijaz has a bank account. Please seize his assets and move it into our account. Done. The bank has to cooperate with them because they are subject to their rules and regulations. If your money was sitting on the Bitcoin ledger, which one of the 9,000 node operators are they going to issue the subpoena to? In fact, they need to issue this subpoena to over half of them that exists in literally every single jurisdiction throughout the entire world. It becomes logistically, legally, physically impossible for anyone to seize your assets outside of physical force, putting a gun to your head. That in and of itself drives a lot of intrinsic value for many people. The ability of it to be a proper store of value that cannot be seized under any scenario. No matter where you are in the world, at a click of a button, you can transfer this asset and turn it into either physical cash, commodity, buy goods, pay your rent, whatever it is that you need to do throughout the entire world. Is becoming easier and easier to transact with this good called Bitcoin.
So let's turn over the discussion. The third part of the book that Eswar Prasad talked about was the central bank not just sitting back and seeing Bitcoin and other cryptos take over their operate in their domain, if you will. And obviously 3 reasons, right? One, they don't want to be irrelevant. Second, they feel at the end of the day they want to remain the trusted source in terms of when the panic happens or something happens, they want to be that entity that controls that. And finally, the bigger concern that central banks will have is if, when they get into their own central bank digital currencies, is this fleeing of capital. Like if it can happen in Venezuela, China, where people take their money and then boom, 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 they move it out very easily, a couple of clicks to other countries, which is their concern. So they will be, and they have the guns at the end of the day. So they'll basically do whatever it can to sort of control or put guardrails around these digital currencies. So in general, what are your thoughts about central banks offering their own digital currencies, which is going to happen because already Sweden is looking into it. I know China is. I'm sure India at some point will. So every country, every central bank that does print currencies, paper currency currently, at some point I have a feeling they are going to come up with a digital currency because they also see where the future is headed and where people how people want to do business. So your thoughts on just the whole central banking, digital currency and so forth?
Yeah, it's a great concept, and it's something. This is probably where I spend the majority of my time with the naysayers. The most common criticism of Bitcoin is why? Okay, Ali, we agree with you. This is the greatest thing that's ever happened. Why would a government allow this to exist when it's going to eat the government's lunch? Why would the politicians allow Bitcoin to dominate and become the reserve, like you say? They're going to introduce these central bank digital currencies and it's going to compete with Bitcoin. Do you agree, Ali? Yeah, I agree. They're going to try to compete. Bitcoin does two things that traditional banking infrastructure does not. One, it is technologically superior. It decreases transaction costs, decreases friction, increases speed. You don't need to, send a wire between the hours of 9:30 and 5 p.m. New York Standard Time. You can't do transactions on weekends. International transfers are a mess. They require multiple days. Right? Technologically superior in every single way. It's cheaper, faster, more efficient, requires a significant amount of less effort to move, and much safer. One, can central banks replicate that? Yes, they can. The technology is open source. They can replicate it. They can, in fact, make it even better. Bitcoin is going on 12 years old. It's archaic. There could be things that could be better. These central banks can make a system that is faster, can handle more throughput, costs less, et cetera, et cetera, et cetera. Yeah, they can do that. They can compete there. Where can't they compete? And that's the second thing that Bitcoin does that traditional banking systems and fiat infrastructure does not, and that's on trust. What Bitcoin does is it, again, separated state and money. It said, here's a finite amount of units, 21 million units that no one can influence. You don't need to trust your government. You don't need to trust your politician. You don't need to trust your corporation. You don't need to trust me or the person who's telling you about this. You can pull up the Bitcoin blockchain and you can verify every single transaction that's ever happened to prove that there have always been 21 million coins. Every single day, you can prove that no one has increased that 21 million. Can the central banks compete with that? They can promise to. They can swear to it the same way we swore to never print dollars without having gold backing, and then Nixon comes in and pulls us off that standard. They can pretend to be this trustworthy authority with this new technology that we should all trust. At the end of the day, politicians will do what politicians will do. Whether it's tomorrow, a year from now, or 100 years from now, they are going to influence this central bank digital currency in negative ways. And we're going to end up mortgaging our kids' futures, our grandkids' futures, in the same way that we're mortgaging our kids' futures and our grandkids' futures today. So they cannot compete with trust because we cannot trust them. This is a trustless system with no CEO, no governing body, no authority, no one you can go after, no one you can call, right? And that's my final point. No, they cannot compete with it because intrinsically, a central bank digital currency will never, ever capture the trust that a decentralized currency such as Bitcoin can have.
Yeah. No, Omar has been sitting very quietly. I think that's one of the main points of the book. But I know Omar, probably being the wise man that he is at UIF here. Omar, I'm sure you have a very good question for Ali, and I have maybe a couple more to wrap up.
I do, yeah. So Ali, you did bring up the political consideration. So in light of, obviously we have a major election coming up here in November. So I wanted to get your take on, candidates and what their, looking to do in terms of crypto, and who might be the better option here for those who are supporters of cryptocurrency and Bitcoin. I saw a poll recently that just a few days ago, end of September, that they were interviewing or polling owners of crypto, and it was pretty evenly split between those who are in swing states, especially like Arizona, Pennsylvania, Michigan. So those voters who are probably like 90% likely to vote, they seem pretty evenly split. So I just wanted to get your take on that, what your perspective was. Is there a particular party that is more crypto friendly, or they're kind of both the same? What's your take on that?
Yeah, let's educate your audience a little bit just on some basic numbers that I put together for this podcast. In 2020, the entire crypto industry gave approximately $15 million in corporate giving to federal campaigns throughout the entire federal election cycle. In 2024, so far, we've given $190 million, which actually represents 48% of all money that has been contributed to these super PACs. So the industry is throwing its weight around aggressively. It is a massive bargaining chip to bring that much money to the table and the promise of more. These politicians are now swaying for favor with the largest donors. These largest donors have, obviously, my interest and their interests, and all crypto holders' interests are aligned. They are seeking for relaxed regulation, the ability to innovate, favorable tax structures that will benefit crypto, which will obviously increase the price and benefit it for everyone. These givers are tending to appeal more to Trump. Trump has historically been a grifter who is willing to cooperate with whoever's got the deepest pockets and whoever's throwing the most money at him. He has been courting the crypto vote in a very aggressive way, in such a way that it seems like Kamala's campaign is looking to replicate some of what he's doing. If you were to ask my friends, who is obviously a much smaller sample than the poll that you mentioned, and not necessarily having to do with swing states, the overwhelming majority of the crypto industry believes that Trump would be a better candidate for crypto than the Harris campaign. The Harris campaign has signaled appointments for specific members in their cabinet that have notoriously been anti-crypto, and that worries the crypto community. Whereas Trump, on the opposite end of that, is talking about putting crypto on the U.S.'s balance sheet, not selling any more of the crypto that the Justice Department captures. He's making it very, very appealing to contribute funds to his campaign from the crypto side. So I don't necessarily agree with the polls that you mentioned. If you were to poll anyone in the know or anyone in the crypto industry, they believe that what Kamala Harris is saying is not necessarily true, and she's trying to appease or capture some of the market share of Trump from the crypto community.
So, Ali, not to make any specific recommendations, our compliance department also listens to these podcasts, and they've made it very clear to me that the purpose of any speakers, people like me, are also our recommendations or anything we discuss on these podcasts are our opinions, and definitely we are not looking to make any buying or selling recommendations to any of your audience members. But if I were to ask you, obviously, Bitcoin came out very clear that you're a big, huge supporter, investor in Bitcoin. But other than Bitcoin, is there any other platforms, be it fintech or be it any other cryptocurrencies, that you find promising? Not that you're recommending, but you find promising or interesting that our audience members can dive deeper and do more research on?
Yeah. First and foremost, my number one recommendation is Bitcoin. My second recommendation is Bitcoin. My third recommendation is Bitcoin. And then after you've, at the very least, purchased one full Bitcoin for you and your family, that one full unit of Bitcoin is very important to me. and it's not impossible to achieve for many people while it's still doable, because it puts you among the 1% of 1% of 1% of people in the world. 8 billion people in the world, 21 million Bitcoin. To be one of the few people that owns a full one, with the backdrop of, we're talking about ETFs that can own over a million. Satoshi Nakamoto owns over a million. Plenty of corporations with hundreds of thousands of coins. There's just not that many people in the world that will ever have a full Bitcoin. So be one of the people that owns a full Bitcoin. Then you can potentially look at other investments out there. Some of the ones that I'm most passionate about are Ethereum. I think Ethereum, if Bitcoin is gold, if Bitcoin is the digital version of gold, and what that means for the global economy, I think Ethereum, a good analogy for it, is the digital representation of oil, and what that does to lubricate our economy. Most of the projects of any value are built on top of Ethereum. It is a decentralized system, unlike Bitcoin, that only allows for -1+1 transfer of assets. Ethereum represents a system that allows for if and or conditional statements. So if Ali does the podcast, then you can release the $1 million that you agreed to pay him, Ejaz. That is the way Ethereum works. It's a language on top of a blockchain that allows for smart contracts to exist, and further reduces the trust required for commerce to happen. Ethereum has many competitors, Solana, Near, among some of them. It is not clear yet who the ultimate winner is going to be. You are making a venture capital bet. You should obviously hedge your bets, do enough research, figure out what makes sense for you. Some of these things, or all of them, could go to zero. We could find something much better, faster. So I will close by saying Bitcoin, then Bitcoin, then Bitcoin, and in fourth place, Ethereum would be my other recommendation for investors who are interested in dabbling or getting their feet wet.
Great.
Okay.
Umar, I'll give you the last question. I have no further questions.
Yeah. So just touching on that, Ali. So obviously you have your recommendations in mind in terms of like what you think is best. But so if you have those who do want to invest, what are the kind of the platforms that they can go about investing into Bitcoin and cryptos? Like how should they go about that? Where should they start?
That's a great question. The simplest, while not necessarily my preferred method, the simplest way is to buy the ETFs. Of all the ETFs, I've done enough research on them. The Fidelity Bitcoin Trust tends to have one of the lowest fees from one of the most storied and successful financial institutions of all time. The CEO of Fidelity has been a proponent of Bitcoin for many, many, many years. They are, unlike all the other, or the majority of the other ETFs, they actually don't use Coinbase as the custodian. So there's a little bit of de-risking in that scenario with the choke point of Coinbase. So if you were someone who has a brokerage account, someone who's got an account with Schwab or TD or Robinhood, someone who's just looking to buy Bitcoin in your IRA or in your retirement account or your old 401k or just in your brokerage account, my recommendation would be to do it in the form of the Fidelity Bitcoin Trust. If you are someone who is a little bit more tech savvy,
I'm sorry, what is the symbol for that?
FBTC.
And in terms of dollar for dollar movement, when you buy straight up Bitcoin versus you buy Frank, Boy, Tom, Charlie, the FBTC ETF, which is very easy to do on any other investment platforms, how much are you exactly losing in movement in terms of frictional costs? Because the ETF is obviously going to have some expenses. So is it just minus those expenses and it's pretty much dollar for dollar, or is it more than that?
Yeah, minus those expenses and pretty much dollar for dollar. And those expenses are minuscule, like beyond minuscule. The correlation between the two assets couldn't be closer. Okay. It's about as close as you can get. The asset does not hold anything besides Bitcoin. It's highly regulated, and the friction costs tend to be minuscule at that scale, given just how much money sits in that.
Okay.
And I'm sorry, what was your other question, Ajaz? Or was that?
No, I think Umar was asking about
The preferred ways to purchase.
yes.
Okay.
Yes.
Now, let's say you are slightly more hands-on. You want to be someone like Ijaz. You're worried. At the end of the day, the government could still seize your Bitcoin that's sitting in the Fidelity Bitcoin Trust, right? It's sitting in a brokerage account. That brokerage account is subject to U.S. regulation. Anybody could seize those assets. A lawsuit, a bad accident, a divorce. So, something could happen where those assets are not untouchable. If you were looking to protect those assets and you're looking for a way to be able to move around freely throughout the whole world, I would recommend you download Coinbase. You can do that right from your phone, or you go to Coinbase.com, you create an account there, you buy your Bitcoin. Now you have the actual Bitcoin sitting in a wallet that's controlled by Coinbase. The next step would be to pull that Bitcoin out of Coinbase and put it in what's called a cold storage device. Think of a highly encrypted USB device. They're called Ledger. The best place to buy them is the one I prefer is called the Ledger Nano X. You buy it right from the Ledger's website. I will share that website with you, Ijaz, and you can put it in the notes for the podcast. You buy it directly from there. Do not buy it from Amazon. Do not buy it from any third-party sellers. There have been horror stories of these getting hacked before they reach you, and you lose all your money as soon as you put them in. So you buy it directly from the manufacturer. It's a French manufacturer who makes these really, really highly sophisticated encrypted USB devices. You take the Bitcoin out of Coinbase and you put it onto this device. The device has a really good set of instructions. It's super user-friendly and very easy to do. Now you have this USB device. You put it in your pocket. The Bitcoin is sitting there. Nobody needs to know anything about it. Don't tell your friends. Don't tell your family. Don't tell anyone about it. It exists. It's there. You can go anywhere in the world. You plug that USB device into a computer, connect it to the internet, and now you have access to the Bitcoin. You can either use it to transact, to send, to buy something with, and it does make you a global nomad who has access to their money anywhere in the world at the whim of at any second.
Great. Well, that was amazing as always, Ali. Thank you for your sharing your wisdom with us and so much information. Appreciate it greatly. Umar, I have nothing else to add. Umar, we will.
Can I ask you a question before we close?
Yeah, absolutely.
What was the price of Bitcoin the last time we spoke, if you remember, and what was at the time before that? I know one time it was down, one time it was up. I want to have a good track record of what my recommendations have been.
Okay, great. So Ali is referencing to these webinars we did in the past. I remember the last one we did, Ali, was in 2022. And
do you remember the month? I have the Bitcoin prices open.
It was somewhere in the summer, April, May. So if you can look up what was
I'm pretty sure it was down, Ali.
April of 2022.
So yeah, I'm guessing the month. Yeah, but yeah,
okay,
I'm guessing
it's all around there. Right? So like April 2022.
And
it was 28. Well, yeah, March, May. I
remember was one time you were asking, and it was in the 30s. Maybe actually, I'm sorry, it was actually higher. It was in the 50s, 50,000 ish. Then it took a dive, and next time we did, it was cut by half. And I had asked you a question back then that when do you cut your losses? When do you feel this was a mistake? But you said nope. I'm staying the course, and now you're probably double from that point. So yeah.
So it was approximately 25,000 or so in April of 2022.
It kind of peaked, I think, October, November 2021, around there, around 60,000 or so, Ali, if I'm not mistaken. And then it went down from there, and now it's back up to kind of the same level.
The first time we did, Ali, you were probably in 2021. I think maybe it was we were right around 50s, if I remember correctly. Then it was down to the mid 20s, and then it actually went all the way down to in the teens, 15, 16, if I remember correctly. And then I think the rebound from there.
The low in December of 2022. Yeah. So we were 50, then 30, and now we're at 60. And I just want to reiterate that my commitment and my conviction is even higher now than it was back then. A lot of the risks have gone away. The big boys are coming in. ETFs are buying. Corporations are buying. Governments are buying. So really, the question I want each one of our listeners to ask themselves is, why haven't I bought yet? What is keeping me on the sideline? And what do I need to do to educate myself? What are they seeing that I'm not seeing? And does this should I have something like this in my portfolio?
Great question. And we'll let people make up their own minds on that. You've given a lot of food for thought for us. Omar, any last comments? If not, I'm good. Thank you.
No, thank you, Ali, for coming on with us again. We really, really appreciate it. Your insights, I think, are just amazing and excellent for our listeners, both those who are kind of crypto enthusiasts and those who are new to the crypto sphere. It's always a pleasure having you on, and look forward to having you on again soon in the near future, inshallah. So without further ado, we'll wrap up today's episode. I hope our listeners found that educational and inciting or insightful in terms of the content we had today. And make sure to check out our previous episodes. We've had other guest speakers and also book reviews. You'll find those episodes enlightening as well. And without any more comments from me, Ijaz, if you're good, I'm going to wrap it up, and we are done for today. And yeah, thank you. Thank you, everyone, for listening in. If you can, please check out our website, myuif.com. That's what powers us to do these podcasts for your benefit. And like I said, if you can check out previous episodes, share those with your friends and family. We really appreciate it. Like, subscribe, do the whole thing. We really love your support and very appreciative of that. Ali, thanks again. Look forward to having you again on in the future, brother. Appreciate it. And thank you again for everyone for listening and tuning in. Take care, everyone.
Guys. Have a good one.